Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Ever looked at your paycheck and seen a big fat zero next to federal withholding? It can be a little confusing, maybe even alarming. You might wonder if you did something wrong or if your employer made a mistake. Don't panic. There are a few common and perfectly normal reasons why this might be happening, and it all comes down to the math your payroll system does based on the information you provided. Let's break down exactly why you might see $0 withheld for federal taxes. The number one reason for zero withholding comes down to a form you filled out when you started your job, the Form W-4. This form is basically a set of instructions you give to your employer's payroll system. It tells them how much money to take out for taxes. The modern W-4, the one used since 2020, doesn't use allowances anymore. Instead, it asks for more direct information. For example, in Step 3, you claim dependents. Each child or other dependent you claim gives you a tax credit. If you have several dependents, these credits can significantly lower your estimated tax bill for the year. If the credits are large enough to wipe out your entire expected tax liability, the system will calculate that you don't need any money withheld. The same goes for Step 4, where you can list other deductions, like for student loan interest or IRA contributions. If you tell your employer you plan on taking large deductions, it reduces your taxable income, which can also result in zero withholding. Another major reason is simply your income level for that specific pay period. The tax system in the US is progressive. This means you don't pay tax on all your income. Everyone gets a standard deduction, which is a set amount of income that isn't taxed. Your employer's payroll software looks at how much you earned in one pay period and estimates what you'd earn for the whole year. If that projected annual income is less than your standard deduction plus any other deductions or credits from your W-4, then your taxable income is effectively zero. If you're not expected to owe any tax, the system won't withhold any. This is very common for part-time workers, students with summer jobs, or anyone who only worked for a small portion of the pay period. There's also the option to claim exempt from withholding on your W-4. This is a very specific situation. You can only legally claim exempt if you meet two conditions: you had no federal income tax liability in the prior year, and you expect to have no federal income tax liability in the current year. This isn't for people who just want a bigger paycheck now and plan to deal with the tax bill later. Claiming exempt when you shouldn't can lead to a large tax bill plus penalties when you file your return. So be very careful with this one. Finally, while it's less common, it could be a simple payroll error. Maybe your W-4 was entered into the system incorrectly. If none of the other reasons seem to fit your situation, it's always a good idea to politely check in with your HR or payroll department. Just ask them to confirm your W-4 settings are correct. The key is to make sure your W-4 is accurate for your personal situation. You can use the IRS's tax withholding estimator online tool to double-check if you're on the right track. It's better to have a little too much withheld than not enough. I hope this cleared things up and gave you some peace of mind. Understanding your paycheck is a huge step in managing your finances. Thank you so much for watching. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more easy to understand